Good morning, everyone. Happy Monday. Hey, Ian. Travis, how are you? Kevin, Joe, how you guys doing? Hey, Cisco, aloha. How was Christmas on the beach? Perfect. Hey, Moran. How are you guys doing? Well, we finally got a little bit of liquidation under that 69.73, but boy, there's some bids in there. So what I'm looking at, and welcome to everyone who's joining us at the Trading Syndicate. Hope you guys had a good holiday. Hey, Tibby, how are you? We are still looking at, this is Christmas Eve's profile, and 73 is where all that inventory is above. So we've got supply above us, right? When you trap people long above a level, eventually they're going to leak out. So we're looking for this, into these areas. I'd say there's probably 69.56. If we can take out 63 as your target on the low side, it's kind of slow right now. So it's sort of leaked lower. We did a look below and fail of Friday's low, and I'll show you how that looks. The levels aren't bad, so we did a look below and fail of 68 all the way back up to 72. And let's see what London brings. Now London should be open today because everyone's kind of getting back to work. So let's look at this week. So New Year's Day, the markets will be closed. So today is the 29th. Wednesday will effectively be the last trading day of the year, which means month end is tomorrow. Okay? Market maker month end is Wednesday and the last trading day of the year. So T plus 1 to Wednesday, which is the 31st, is the 30th. Tomorrow's month end and year end. Welcome to everyone who's joining us on YouTube. Hey Jerry, how are you doing? Ready to get back to work? Good, good, good. So the way I trade is to take the look below and fail. So if I was scalping, I'm not trading yet. I'm just kind of watching to see how well the levels play out. You know, the beautiful trade about the look below and fail is the market goes under a level. It doesn't need to sell into that level because it sees buyers lining up. So the offers lift, you go long, you got a place to put your stop, and your first sell order would be 72. Of course, your target will be VWAP if it can break 72, 73. How do you find the stops on profile? Is every high, yeah, profile is basically a half hour chart. So you look at the top and the bottom of your candle, right? That's where the stops will be. So Dan, the look below and fail is the oldest trade known to man. Most of you guys, when you're going long, are hoping for the look below and fail. Most of you don't even know what it is. But the look below and fail, and I didn't make up this term, it's just a term. All it means is when something is for sale and it goes under a certain price, and the sellers see that there are a bunch of buyers lined up, they will raise prices, right? Simple, basic commerce, right? So if you're selling and you took the market under 68 and at 66, 67 you saw a bunch of buyers standing there with their cash waving in your face, you would raise the price over 68, see if they pay 70. If they pay 70, good. Let's see if they'll pay 71. Get it? Very simple. So when the market, that's why I draw these boxes, because when it does this, you go long here, you got a place to put your stop, you got your first target and your second target. Now, 68 to 72, 69 to 72 isn't a huge amount of money, but if you can pull up 3 points, is 150 bucks on one E-mini. You multiply by that 3 to 5 contracts. Right? Pretty simple. Right? You could make a decent living just trading this way. Right? And I encourage people to trade smaller time frames so they can manage their risk and learn how to actually do business without killing themselves trying to make 30, 40 points in a day. Eventually you will. Kiddo, sorry, I don't understand your question. A look-up bid? You mean a lookout bid? No, market makers want you to take the offer. Think about, do you know what the bid and the offer is, right? So would you rather sell off the offer or on the bid? You'd want to give it more, right? If you're long 1,000 contracts and you're offered at 72 half or 72 quarter, 72, you'd rather sell it at 72 than 71, right? Unfortunately, trading education has gotten so bastardized that the simple commerce of how a market works has been completely convoluted. So when I go and talk about simple things like there's no supply under this price, people are like, what does that mean? You know, the most basic things they've taken and they said you need this and you need that and you need this and you need that. See, look, watch the market right now. The offers are lowering, right? Because we ran out of buyers here, so we put it on sale. And as we put it on sale, if you're a short seller, that's how you short. If you see that there's a seller here, you short here, you put your stop where the seller is, and then you put bids in to cover. If those bids don't get hit, then you know there's nothing for sale at that price. Yeah, I don't know, kiddo, I wouldn't spend too much time thinking about that. That's another thing. Don't really worry about what the market makers are doing. What are you doing? How are you going to make money? Right? If you understand some simple things, you don't have to understand how market makers manage their short inventory. Right? Not to belittle the point, but really, really want to stay on track. Right? Yeah, Dan, just think, Dan, I want you guys to close your eyes. Don't fall down the market maker hole, okay? Don't fall down the market maker rabbit hole. Close your eyes and pretend you're selling something and you've got 1,000 units. Okay? Do you want to sell it at a higher price or a lower price? Price is not inconsequential. But sometimes we got to put shit on sale to get rid of it. You know what I mean? Sorry for the bad language. But sometimes, you guys, don't overcomplicate this shit. Right? You got 1,000 contracts. Would you rather sell them at 72 or 68? Does this any light bulbs going off? Or are you guys still swirling around all this internet stuff? Right? Like the guy who says he got kidnapped by market makers and all that bullshit. Right? Don't fall for all that stuff. Now, what is your trade, Dan? Right? There's no stupid questions, but all I'm trying to do is to keep you guys from wasting your time going down rabbit holes. And the guys in the room are not asking any questions. That's why I'm entertaining these questions on YouTube. Because everybody in my trading room's asleep and they're not asking any questions. Right? That's why I still have the chat going on YouTube because my room's so quiet. Everyone's half asleep. What's up, Raj? How you doing? I understand. It's after Christmas. Everybody's still eating turkey. You know, trading is simple. It's not easy. That's why I'm trying to help you guys by keeping you on point. Right? Now, and the thing is, as a retail trader, you're not going to get the lowest price and sell at the highest. Right? That's delusional. Right? That's why we keep taking your money over and over and over again. People go for the same stuff. Right? Of course you want to try and get the best prices. That's good business. But in reality, sometimes you're going to pay more, sometimes you're going to have to sell less. But that's business, right? Any of you guys actually have worked in a business, run a business, right? You'll understand that, if you have a business that sells something, that's called your inventory. The cost basis is how much you paid for that inventory to acquire it. And then you try and sell it for a profit, right? But sometimes, if you have inventory that's mispriced or you misjudge a market, you're going to have to blow out your inventory to get back your capital. Yeah, no problem, Dad. Just let's get off the market maker thing right now. Just have to understand that there's a wholesale element. And when that wholesale element starts to compete with each other, price goes down. When that wholesale element sees that a bunch of suckers are willing to pay more, price goes up. Right? It's very simple. Keep that very simple in your head. Now be done with it. Now, focus on your trading setup. No, I don't look at that shit at all. That's all bullshit. No. I teach you where to find the bid, where the offer is, and how to do business in between. I teach you when to do business. I don't go in through all that crap. But hey, good for those who make money off of it. There's a sucker born every minute. What's going on in my room there, guys? You guys awake? I know the candles are small. Business is really, really tight. It's slow. What I'm really looking for is if we can get underneath this 73, which has been support. We go up and come back, go up and come back. Now let's see if we can stay under 73, take out that overnight low when London opens in 13 minutes, and come down and take out that lower stop at 65? Where is it? Yeah, that stop has been there since Christmas Eve. I want to see that getting taken out. Yeah, all my trading is based on common sense, which isn't really so common anymore. That's why people really have a difficult time. You got to sit and watch, kiddo. So right now, right, we're looking at pretend the previous day low at 69 is a stop. Okay? Because people who are long will have their stops here, right? So the people who got long here, right, this will be their warning level. So well, look at that K low, look at the previous day low. Do you see how there's a space? That means that there are bids there and the sellers raise price. Very simple. Ah, yes, driver education. With the LBF, I know you said to tend to go early, but if you see a big candle, yeah, it all depends on the situation, Joe. I always tend to go early, get stopped out, and then have to retake the trade, right? That's my sort of because I'm always because when you're institutional, you got to be first, right? Otherwise, you're fired. So in retail, you got to chill out and wait. Sometimes the market doesn't give you that opportunity. Sometimes it looks below like 68, comes back up, and you might be slow, you might miss it, and you get a big green candle, and you miss the train. It happens, right? It happens. So generally in slower markets, that trade is a lot. The execution is a little bit less rushed. Okay. In fast markets, when they're choppy, right, you might miss it. The AI will help you do that, Joe. The thing is, you got to sit and do it. That's why I tell people they've got to do this trade 1,000 times, right? As you keep doing the trade, over time, you will start understanding the subtleties of the trade when the price action is different. So you'll know, oh, it's this kind of a market or this kind of a market, right? Like for right now, you can see how small the candles are right now. That means business is slow, right? Very simple. Small candles, slow business. Bigger the candle, bigger the order, right? So it's just experience of sitting and watching. That's why they say you've got screen time, right? Ah, approach to the new year? Yes, I do. Uh, I trade for income. So I'm for me, I just go to work. When I reset my trading for the year, I'm not a position trader, so I don't do the thing like Jesse Livermore where where he used to lock himself in the bank vault and go over all his positions and everything. I'm a scalper, so it's a little easier for me. I would recommend with position traders for them, they have to look at their macro a little bit. They have to spend more time looking at the chart. Now, generally, year end, you get a markup at year end if the order flow permits, right? So, as the markets right now, they're near all-time highs. Are we going to, you know, in the first month of the new year, are we going to have any liquidation? Now, I remember, was it last year or the year before? Right in the first week of the new year, the market started to sell off. Everybody shorted it. Then the second week, everybody came back to work and the shorts got trapped. Right? So, it depends if you're position trading. I mean, if you're an investor, then there's definitely a lot of work to do at the end of the year because you're looking at your positions, you're looking at the companies, you're looking at the charts. The best thing I find for longer term traders is let the chart tell you what's going on. Like for Tesla, for example, right? You can see that there's clearly selling competition at that 495, 496 level. And it's kind of bid here, 475. So when markets are going sideways like this, you know it's a distribution, right? You've got that being distributed up here. But Tesla right now is above its cost basis, right? So things like that. So will that come back or will this happen in Tesla in the new year? Right? Or will this happen first and then that and get a flush back to cost basis and then a rip back up? Those are the kind of things that I would be making notes on. I'm going to do a year-end video for you guys so you can, you can see Apple 266. We've had look below and fails of 266 all the way back up into the 70s. Right? So if that level fails, for example, if 266 fails and then 261 fails, you'll come back into this 255 cost basis. Right? So a P profile is short covering, a B profile is accumulation after a liquidation, generally. There's no such thing as a D profile that I know of. Right? Yeah. Let's see what happens here. Let's wait for London to open. Yeah, your year end is a lot easier when you're a scalper. Right? So Howard, you are asking me, how do you tell when it's slow? This is it, Howard. Candles are nice and tight. Right? So would you trade this? No, you wouldn't. Right? No need to trade this right now. And folks, market profile, just for those who are wondering, remember market profile is a great tool, but that's another rabbit hole that you could fall down, that you can waste so many years on market profile. There are a few key takeaways to market profile. Where's the inventory? Single prints, poor and low highs, right? Is the inventory being sold at a higher price? Is it being marked down? It tells you that very quickly. Single prints tell you if there's trapped longs or trapped shorts. Single prints on the way up, trapped shorts. Single prints on the way down, trapped longs. And then poor low, poor high. Yeah, it's posted, Howard. JJ levels. I posted them, oh man, hours ago. But I'll post them again. There you go. Yeah. 2026 should be the year of execution. There's almost only so much theoretical crap that you're going to need to know as a day trader, right? Or a retail trader. So here, there was a seller here. And then the sellers moved down here, right? So say you went long at 70, right? Or 71 here. You know when we get to the top of these candles, they're going to initiate sellers. Very simple stuff. But nobody wants to watch that because they want Nosebook and Faceplant and all this crap software. And they want to be charged thousands of dollars a month. And they're not going to make any money anyway off of that. If you just watch the offer, your life will be so much easier. Right? If you know that there are going to be sellers here, what a big surprise when you get up there, right? The top of the candles are where the sellers initiate and compete and push price lower. Think of it as a store. The TV's $1,000. right? When it comes up here again, nobody wants to pay that, so they put it on sale, put it on sale, put it on sale, put it on sale, right? Watch the red line. The red line is how price is set. Sellers set price according to the flow of customers, order flow, that come into a market. That's all order flow is. It's just the flow of customers, right? So if someone's trying to sell you order flow software, they're selling you total bullshit because order flow is a marketing term. Don't fall for all the BS out there, folks. Learn how to execute based on common sense in the business. You really, the profile I have, because I've had profile on my screen since 2012, and I finally cracked the mystery of market profile, right? And those four things I talked about are what you really need to know to make market profile practical, right? Trading is nothing in trading is good unless you can take it and put it into practical execution. Other than that, it's just a bunch of BS and a bunch of guys sitting around pontificating about, oh yes, you know, delta, schmelta, iceberg, order, blah, blah, blah. Well, how do you trade it? I don't know, right? Here we have a very simple way of trading. It looks below level, comes back up. You know that the sell orders under 68 are done. So you buy 69, you put your stop at 68, you sell a little at 71, 72. Right? Here, it's not clear, right? You could tell that there's a seller at 71 quarter, and now those sellers have moved down from there to here, 70 and 3 quarter, right? And as we go into the London Open, let's see when London opens, it's got to take out those sellers, and if not, we're going to rotate lower, right? And we're focusing on 65 if we take out the overnight low. Real simple, right? So if you're a short seller and you're short, your warning level is going to be 71, and I wouldn't really spend that much on my stop, maybe 72 quarter, right? I'd be looking for a break of 68 and follow through selling. Here we go. We got 6 seconds. You watch that offer at the previous day low. Here we go. We're offered lower. Some bids come in. The offer raises. Right? See? The offer is lifting. So as London is opening, very simple, you guys. Very simple. Don't overcomplicate this. Focus your energy on execution. Everything else is bullshit. Keep your mind clear so you can execute, right? When you're in a fight, you're not worried about Euclidean geometry. There we go. There we go. There's that seller. So if I was short 70, right, it'd be putting some covering bids in here, 67, 68. You know there's going to be some buying at 65. This is healthy. Finally, we've had a couple of sessions now. We haven't had any liquidation, right? Not a lot of contracts are trading down there, but at least the bids are kind of moving lower because they see a seller, right? Beautiful. No, you never lose when you do a deal because your stock is priced at 0.0001 cent. So even if you sell all your stock for a penny, you still make money. That's why we call it smart money. There's smart money and dumb money in markets, right? Smart money are the people who have the stock that's priced at 1/100th of a penny. Get it? Cost basis is everything. It's a good question, right? Sure, sometimes, I remember we had a deal that, we had to sell our stock at half a penny, right? Well, we still made a couple of $100,000 selling stock at half a penny because Well, I got my stock for free, but the insiders, they paid a hundredth of a penny for their stock. So if they sell it at half a penny, they're still making money, right? Not every deal works out, just like not every trade works out, right? Some deals, you great. You open the stock at 30 cents and you can jam that thing up to 30 bucks. That's always beautiful. But sometimes, it's hard to bring in buying, or the deal sucks, or the CEO is a total, excuse my language, dipshit, which happens a lot. So you got to sell it for what you can get and walk away to the next deal, right? But smart money never loses. Smart money never loses. So I want to teach you guys smart money concepts. So this is looking like another look below and fail, but we know that if you are buying, I would wait maybe another minute here. Let's see, maybe another 30 seconds. If we hold over 68, we should rotate back up to 70 and a half. Here we go. I don't even have my trading account open right now. These next 3 days are the days that you really want to protect your money. You guys savvy? Any money that you made this Christmas, any money that you made in December, all year, the next 3 days, you really want to protect that money. Wrap your arms around it, right? Anybody who comes near your money, you shank them, right? Don't let anybody take away the money that you made this year, okay? Be smart. Learn how to be smart money, okay? Smart money never loses, right? You as a retail trader, we are going to get stopped out. That's the cost of doing business. But we don't make dumbass mistakes like adding to longs that are losing, adding to shorts that are losing, right? Those are dumb money concepts, right? There's smart money and dumb money. Don't be dumb money because you'll just be food for the rest of us. Now, if you want to learn how to be smart money, come check out our trading room. We are the only trading room that has its own AI. And all these crazy questions that you guys love to ask, our AI is programmed to give you proper answers. So you're not learning how to trade from somebody who used to work at Burger King. Okay? It's the problem with a lot of these trading rooms. They're run by people who wouldn't know a trade desk if they tripped over it. Right? Every trading room or any educator that you go to look at, ask them what the business reason for the trade is. If they can't tell you what the business reason for the trade is, they don't know what the F they're talking about. All right, let's see what happens when we go tickle that. We're looking for this right here. See? Keep it simple so you can execute. Don't waste your money and your time on flights of fancy. As the great band once said, don't go chasing waterfalls. Okay? Let's see. See a little bit of short covering coming in? You see where that stop is? So this is the important part of market profile. And you don't need market profile. You can use a half-hour candle. So if you know that there's a low there from the 24th, you can expect some responsive buying because that's where the short sellers are sitting there like dogs waiting for a piece of food to fall off the counter, right? Sometimes they get a little anxious and they jump up on the counter. They go take the offer, right? Very simple. right? Would I be going long off of that? Probably not here. It'd be a great place. Like, remember, if we were short 70 or 69, this would be a good place to do some covering because you see others covering. Is that clear? Do you guys understand? I know it's been Christmas and we've had some time off. Just take it easy and ease back into this week. All right? Keep your mind clear. And just focus and concentrate. Clear? You guys still awake? Anyone still here? You guys understand? Yes? No? Just checking. I just want to check. See if you guys are still awake. No worries, Ian. No worries at all. Good, good, good. See, this is the short covering that I was talking about. I told you there'd be responsive buying at that 65 stop. There it is. You can see a little size, right? 300 at every tick, 200, 300. Now everybody asks, why wouldn't they cover lower, right? Everybody wants to know, why don't you cover lower? Well, you got to cover where you can when you're trading size. And that is the problem of trading size, right? When you're trading size, you have to cover where you can, not where you want to. Where the business permits, right? Don't worry, you'll get there, Dan. Don't worry. Now, do I think that low? Do you think our 65 and a quarter low will hold? I don't know. I'm hoping it breaks. I think the market needs some nice liquidation. And where I'm looking structurally for that liquidation is here. If we break this, right, I think there'll be some. This is the area I'm curious about. What's lurking down here for bids? Right now, they're front running that stop. See, look at all the volume coming in. Now, Howard, you're always concerned about the puck. So you'd want to see that point of control move from down here, here. Would show good absorption, right? The point of control doesn't have time to move down. That tells you information as well, right? It means there's not enough product for sale for enough time. That's why you should use time and volume together, because if there's not enough time to move the point of control down, it means supply is running out. That's a waste of your time, kiddo. You gotta, I understand that you're curious about a bunch of things like that, but it's an order book. Market makers don't own stock. They're just truck drivers that deliver it. Now stop asking about market makers and ask me some trading questions. Have you made any money this morning? Right? Don't you want to make some money? You could be just independently wealthy and curious. And there's nothing wrong with that. But I do these streams for people who want to actually try and make a living doing this. Right? Now, kiddo, go ask me some questions about trading. Okay? Unless you're trying to get a job at Susquehanna. Just giving you a hard time. I'm just trying to keep you on focus. Every time I keep you on focus, you go flying off again. The chart with the ABC letters on it is called a market profile chart. Basically, Yoder, it's a half-hour candle chart where we open up the chart and see what's inside the candle. So it's just a fancy half-hour candle chart. That's all it is. It gives us information on where people are trapped long, where they're trapped short, that kind of thing. You don't need it in trading. When I started retail trading in 2012, I'd been institutional since 93. And in 2012, I had a heart attack, so I had to do something a little less stressful. So I couldn't figure out candle patterns because, people would give me these books on candles and they were like Old Testament thick. And I was like, how does anybody memorize all these patterns and then execute? And I realized they don't. They all lose money. So I fell into this Jim Dalton thing, and I realized because he was an ex-director of operations on the CME for, I think it was UBS or Deutsche, not UBS, I think it was. So okay, this guy knows what he's talking about. And he was using these market profile charts, and they made sense to me. But I went down a market profile loophole that was about 5 years that I shouldn't have gone down. Right? And we were looking at all sorts of tiny little details that didn't make us any money. Highly frustrating. So basically the chart on the right-hand side I use, it's like a map of the city. And then the chart on the left-hand side is a 1-minute candle chart that I actually use for execution when I'm day trading. So now it tells us that we're in a neighborhood where there's a lot of short covering. So that tells me I really don't want to short down here, right? We don't have single prints yet, right? If I got rid of all the drawings here, you'll see, and I squish this profile, there are no single prints in this profile, right? But what we can do, it's a good question now. Now you're asking good questions, right? You can see where the longs are trapped because the offer will go up to a certain place here and stop, right? And let's see how it offers over this white line, but nobody wanted to take it? Watch, it's going to try it again here. If it can't, when the next candle opens, that's why I have the timer there. So I know that there's a seller at 67.5. So I know if I was long 66, it's not going to be the greatest long. So where the longs are trapped, that's where they're going to sell and initiate selling. The wholesale traders that are long positioned down here at 62, they'll sell it all the way down, but the thing is, they'd rather sell it here than here. So we'll just play cat and mouse with those short sellers and see if we can get them. Let's see if we can get a print. See, look how the offer, there's a print. Now, can we print 68? Oh, we printed 68. Now, if we stay above 68, can we go print 69.25? That's how you should be thinking. You should be thinking about this, right? Because large traders will short a market down, find the bid. We found the bid temporarily. right? You short down to the bid, you cover. Then you can flip and go long, right? But you know where the sellers are going to be, so you know it's not going to be an easy long, right? Yeah, why would you be going short there, Howard? You haven't listened to anything I said, but that's okay, right? Right? That's why you shouldn't be doing that, kiddo. Go look at a 1 minute candle chart. Why are you concentrating so much on profile? Right? You know where the stops are. That's all you need to know right now. Go look at this. There. I just solved your problem. Right? I just solved your problem. Right? Why are you banging your head against the wall? See, problem solved. Take the TPO chart off the screen. I'm looking at inventory and cost basis, Chris. I have, I think I've got 400 videos on YouTube where I explain this every single day. So I look at a cost basis. So the blue zone is a cost basis. The red zone is 2 times discount. This blue area is 4 times discount. This is 2 times profit. Remember, it's a market, right? So do you want to be shorting in the discount zone, or are you looking for a buy in the discount zone, right? What TPO chart? uh, I don't see any TPO chart. No, just kidding. Don't focus on this too much. Eventually I'm just going to do this. I'm going to run the TPO chart, show you where the stops are, and then I'll just go to a candle like this because this is all you guys need. Just focus on this one chart, right? Remember, okay, if I told you in New York City, right, and you need to get to Chinatown, right? Once you get to Chinatown, you already know where Chinatown is. You're in it. So go look at the streets in Chinatown. Yeah, but the market doesn't care what you prefer, kiddo, right? The market doesn't care what you prefer. The market doesn't care what you like. Step two is waiting for your trade setup. You identify where the cost basis and discount and profit zones are, then you wait for your trade setup, right? You always identify the seller. Now the sellers are at 67 3/4. Howard, check your direct message, please. So for now, we found the bid at 65. I don't see a trade just yet because I know their inventory is above us and it's choppy and it's slow. So the other thing in retail trading is you got to learn when to do business and when not to. And that's why a lot of you guys keep blowing up accounts, because then you're trading when you're not supposed to be trading, right? And you got to learn that difference, right? I do business when the business hits my set. When my setup shows itself, then I'll do business, right? But I know it's the end of the year, and this is where all the dumb money loses and blows up their accounts going into month end. If I had a nickel for every retail trader that blew up their account at the end of the month, end of the quarter, end of the year, I'd never have to work again. Because desperation, the market is almost like a dog. It can smell your desperation. The more desperate you are, the more it's going to take out of you. It can smell it. You can smell the desperation in the air, right? I've been desperate for money. I understand these things. I'm not above you guys, right? Been there, done that, got the t-shirt. Got my ass kicked. Whether it's in deals or whether it's in trading. You cannot be desperate trying to do business, because you will get destroyed. That's pretty much it for today. So we'll be back to our regular schedule. I'll be at the desk at 9 a.m. Eastern Time for our next session. Come join us at thetradingsyndicate.org. If you want to learn how to do this and make some money, stop blowing up accounts. If you're tired of blowing up accounts, if you're tired of losing all the time, come with me and live. We'll get you there. Thanks, everyone. Have a wonderful day. Still the holidays. Take it easy. And we'll see you at 9. Bye for